Hello class, this is Dr. Fenton. In these PowerPoint slides, I thought I'd cover the highlights of the chapters. Now, these slides are not to be in place of actually reading the chapter itself. You need to read the chapter in detail to pick up a lot more information they're giving you. But this will just be to cover some of the highlights. So let's get started. I'll hide my little window down here. Okay, so in chapter 1, we learn about forensic accounting. Now, forensic accounting includes not only fraud examination, and that's what a lot of people think about, but it also has litigation support as an area. Here you can be an expert witness in a court case. You might testify on the witness stand. You might be called to testify in a deposition. And what you may do as part of this is compute damages for a business. So if one business feels like it was damaged by someone else or another business, then there's a lawsuit brought, but someone has to compute the damages. So this is a great job, a great career for accountants to do. Also, business valuation, another big area for accountants. Whether you're going to sell a business, need to divide the business up for some reason, need to buy a partner out. There are many reasons why a business needs to be valued and have it like a fair market value for those involved. Now this next slide, they talk about a fraud auditor or fraud examiner. And of course, as you probably already are aware, this is an accountant especially skilled in auditing who is engaged in auditing with a view towards fraud discovery. You're called in on a job, and it's your job to find out if there was fraud involved, and then hopefully help find out who was the cause of this fraud. Then you'll also help with documentation. You'll help with setting up internal controls to help prevent fraud. Now, a forensic accountant includes fraud engagements, but also much more than that, as we saw earlier. And the skills needed to be a forensic accountant are varied. You need a good working knowledge of the legal system, because again, you might be working on a court case for one side or the other, and you might be called into the courtroom to testify in court. And then you need to be able to record and document all of your work, be able to speak about all your work. So communication skills, both oral and written, are extremely important in the forensic accounting area. Now your report you'll write for either a business valuation or in a court case to explain your damage calculations, they need to be very, very clear in the written part. And also, if you have to explain them in a deposition or in front of a judge and or jury, you need to be able to do that so that your work is considered excellent, and hopefully you'll help your side win or the case, or at least compute the damages correctly. This is a long definition of forensic accounting. This is in your textbook. It gets into identifying, recording, settling, extracting, and goes on and on. So there's quite a bit involved in forensic accounting. Now, the ASCPA in 1986 put out a practice aid, and they defined, or they really broke forensic accounting into two broad areas: investigative accounting and litigation support. The investigative accounting is more fraud examination, and litigation support can be like working on a court case for one side or the other, to compute damages, and also leads to business valuation, because sometimes the valuation that you might provide and then the other side has an expert provide valuation, they might be quite a bit different. So even a valuation case might end up in the courtroom. Back in 1998, there was the Public Oversight Board that appointed the Panel on Audit Effectiveness. So I want you to go into the chapter and read more about this, and they tell financial statement auditors how to hopefully do a better job when they're out auditing companies. That panel put out a 200-page report in the year 2000, and that, even way back then, they recommended that auditors, these are financial statement auditors, provide, forensic type procedures during every audit. So this is not a fraud examination. This is a regular, external financial statement audit. And back in 2000, they were recommending you need forensic type procedures because there has been a lot of fraud in statements over the years, and auditors should hopefully help discover that. In 2003, the ICPA Task Force put out a report entitled what? Incorporating Forensic Procedures in an Audit Environment. Again, it goes off of the other report, and more forensic procedures and investigative techniques should be performed in an audit. This is not to say that we are turning an external financial statement audit into an entire fraud examination. No. Fraud examinations are much more time consuming and look at much more detail than a regular financial statement audit. But part of the audit steps in a regular audit should be forensic type steps. Something different, not used maybe the last time, and that's to keep the client not really knowing exactly what you're going to look at each time, so hopefully they will not be encouraged to try to commit some kind of fraud, so they know you might catch it. Now, advice for forensic auditors. These are new forensic auditors. Whether you're in a financial statement audit or a fraud examination, find out who did it. It's very important. You're always looking for that person who performed the embezzlement or whatever was involved here. Don't worry about all the endless details at the beginning, but try to find out who did it. You will worry about details, yes, but don't worry about all of them at the very beginning. You must be creative. You must think like a fraudster. How could a person have done what you're investigating? Don't just look at the regular predictable patterns. Think outside the box. On the next one, take into consideration that fraud often involves conspiracy. So maybe you're looking for 2 or 3 people who've gotten together and they've overridden internal controls. And then the last one talks about internal controls. So lapses occur when vacations happen, sick outages, days off. So if someone is at the company day in and day out and they are trying to hide something, they are committing embezzlement or something like that. A lot of times that pops up when they like have a sick day or sick week. Someone else fills in their position. They find something's not quite right that might open the door to discovering the fraud. Now this is in your textbooks. I'm not going to go all through this, but this is comparing what I call a regular financial statement audit to a fraud examination and then to other forensic accounting procedures. So you can look through here, purpose of the report. Let me jump down to this one. And you're going to ensure with a regular audit that the company is following GAAP. Okay? Fraud examination, you're trying to not only identify the perpetrator, like it says here, but how the person did it, and do you have the documentation that would stand up in court if this fraud case goes to court. And then the other one can be litigation support and business valuation. This gets into expert reports that are prepared, and so in a litigation support kind of job, the other side is going to look at your report and they're going to read through it with a fine-tooth comb to look for bad assumptions, look for mistakes and so forth, and they're looking for something that's going to hurt your status in the courtroom. Business valuations, again, your report needs to be very, very clear on exactly what you're evaluating. Is a certain percent of a company, and then the purpose for this valuation. All that needs to be in a very well-written report. Now, some white-collar crimes. We're going to discuss these in future chapters. We'll talk about antitrust violations, bankruptcy fraud. We're going to talk a lot about corporate and securities fraud, healthcare fraud, a lot about money laundering, mortgage fraud, and quite a bit about embezzlement. So we'll see that like I said, in the future chapters. These 2 slides has a lot about Sarbanes-Oxley. Again, go back into the chapter, read it in detail. Sarbanes-Oxley was a very, very important law passed that really, I don't want to say took control, but provided a much more oversight over the accounting profession. So the SEC stepped in with this law, set up the Public Company Accounting Oversight Board, and now they really look at what the accounting profession does, the principles that come out, the audit procedures that are established. And so the SEC, through this oversight board, really, like I said, watches the accounting profession very, very closely. So a lot of items on these 2 pages. So you can read through those yourself, and they're in the book. Now, COSO, this is the Committee on Sponsoring Organizations. It was set up years ago. It deals a lot with internal control, and we'll see that in Chapter 4. The Foreign Corrupt Practices Act, even though it was set up way back in 1977, this is still used every year. You find companies who are committing corrupt practices, and this mainly deals with bribes and kickbacks around the world, not just in the U.S., around the world. And we're trying to stop this, trying to prohibit, payments going to corrupt foreign officials. It requires companies to keep books and records that can accurately reflect the issuer's transactions and disposition of assets. So records must be kept in a lot of detail, and it covers both issuers and domestic concerns. International and domestic really is who it covers. This is a very important act, a very important law. It's still used almost daily to examine companies. Now the AICPA in 2019 set up some more standards. They went with the Black's Law definition of forensics, and they say that for your specialized knowledge and investigative skills, you need to collect, analyze, and evaluate certain evidential matters, and interpret and communicate findings. We've already talked about this. And there's the 2-prong test, litigation or investigation. And then if you fall under this area, that's what we're talking about, forensic accounting area, then you must follow the general standard rules of professional competence. These are the rules put out by the AICPA. Also the ones that cover due professional care, planning and supervision of people with not a lot of experience, and then sufficient relevant data as you're working on the job. More includes, you must meet the consulting standards. Again, these are AICPA standards. You can go to their website and find those. You need to have your written or oral understanding about the responsibilities. So if you're going to work on a business valuation, if you're going to work on a court case, you need to be very, very clear what your job is, the nature, the scope, and limitation. That needs to be very, very clear at the beginning. This needs to be done with a written engagement letter. You could get by with an oral understanding. I would not suggest that. So a written engagement letter spelling, again, the nature of the work, scope, and limitations. And the forensic accountant can only be an advocate of their own professional opinions, not for one side or the other. They're still supposed to be, in a way, independent. They're presenting their findings, let's say, to the court. So you need to appear and actually be independent. And that's when you can be, taken more seriously by the judge and or jury. You cannot have contingent fee arrangements, and you may provide expert opinions on fraud situations and other situations like business damages and business valuations. So those are the highlights in this chapter. That's the end. Again, go back and read the chapter carefully. These slides are not to replace reading the chapter very, very carefully. Okay, so good luck with your studies.